Louisville's apartment market has enjoyed some strong demand through the first half of 2014, driven in part by economic gains coming from what might be a surprising source. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Louisville update. Louisville's not technically in the Midwest region of the country, but it's just a swim across the Ohio River away. And like much of the Midwest, Louisville has an outsized presence from the manufacturing industry. In the Louisville metro area, 12.2% of all jobs come within the manufacturing industry, compared to the national average of just 7.4%. Why is that relevant? Because for the first time in a long time, Louisville's manufacturing industry is enjoying a prolonged hot streak. Here's a year-over-year change in manufacturing employment for the metro going back about 25 years or so. And you can see that the growth peaked about a year ago, but it's still been very solid. You can see for the last year, continued growth. On net over the last 4 years, Louisville added about 13,000 manufacturing jobs. And more good news of late with Ford announcing an $80 million expansion of its Ford truck plant here, which will add another 350 new jobs. So what's the relationship with the Louisville apartment market? Well, after a slowdown in the second half of 2013, Louisville saw some strong demand in the first half of this year. That drove occupancy up 130 basis points to 95.6%, also up 40 basis points year over year, and that rate was on par with the U.S. average. And looking at rent growth, what's really impressive here is that rents barely fell during the downturn. Just one single quarter where Louisville registered a year-over-year rent decline, very unusual and impressive. More recently, the trend is still positive, but it has become more volatile of late. Like with occupancy, the numbers are much better than we saw in the second half of 2013, though. Year-over-year, same-store rents for new leases were up 2.9% as of Q2. That's below the hikes that were typical here in 2011 and 2012, but still a solid growth rate and likely sustainable. The best growth was coming in older, more affordable apartments built prior to 1990. That's been the case now for about the last 3 years. As of Q2, rents were up 3.4% year over year in units built prior to 1990 versus just 1.7% in units built since 1990. Now, despite that disparity, we're seeing apartment construction levels at decade highs in the Louisville metro area, about 1,800 units or 2.4% inventory growth. So still actually a manageable volume in the big picture, but it'll be interesting to see how the market handles this load of new supply, given that rent growth has been less significant at the top of the market. The good news, though, is that occupancy is very tight in those units, and so theoretically there should be some pent-up demand there. And overall, we think the outlook is healthy, although certainly some downside risk if we start to see the manufacturing industry revert to the long-term norm of seeing some contraction. And that wraps up for Louisville. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.